please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
A very good afternoon. Welcome to Halftime Report. It's 12 noon. We're halfway through the trading session. Well, it's a good time to run you through all the top stories. Friday morning, things looking good. I'm Nigel D'Souza, and with me is Lata Venkatesh. Lata, things looking good today. The Nifty is holding virtually at the high point of the day. A little bit of an underperformance in the mid-cap index, but that's fine, I guess.
Oh, absolutely fine. I mean, did we realize that we will be just about 20 points short of the all-time highs? Yeah. And at some time back, we were actually only 15 points short of fresh all-time highs. And don't mistake the or don't underestimate the Nifty bank either. Yeah. The all-time highs is 25,198, okay, 25,200. And here we are at 24,685. So, we are not a great distance away even in that index. But clearly, it's the Nifty that will get to blue skies first. But the Nifty bank has shouldered the Nifty very well today, you will have to say. All that and more is going to be discussed. Whether early Diwali has broken on Dalal Street is what we will be discussing in the next 1 hour. Let me first welcome you with the top headlines.
All right, then first up, Nifty is trading near all-time highs. The Sensex 2 adds close to around 250 points and trading near the day's highs. Bank Nifty leads the way while mid-caps are relative underperformers.
The Nifty bank is up almost 1.5% today after better than expected industrial production data for August, and inflation also remaining subdued at just over 3% for September.
And Tata Tele and BhartiAirtel, they surge in trade on news that both companies will merge in a debt-free and cash-free deal. Analysts say Airtel will gain access to spectrum worth 15,000 crore rupees post the deal, and its revenue market share will rise to 40%.
TCS gains after second quarter dollar revenues meet expectations and margins bring a pleasant surprise. Management expects demand recovery in the near term, tells CNBC TV18. They will have some insights on BFSI demand by third quarter.
And all eyes will be on Reliance Industries' second quarter earnings. The stock is up close to around 1% today as analysts expect the heavyweight to report its 11th consecutive quarter of standalone earnings increase. Focus, though, will be on RelGeo's reported numbers.
All right, this is that time of the day, midday through the trading session, when we tell you the big movers and shakers of the morning. And Nigel, over to you. What are you spotting?
I'm spotting three stocks, Radha. Let's start off with my core. That's cement. Sanghi Industries. Dream run that stock has had. Anand Rathi, they have come out with a note. They have a target price of around 147. They're citing various reasons for having such a high target price. They're saying that, in fact, it's a low-cost cement producer. They're primarily in the west part of the country, so they're expecting demand to improve over there as well. The savings are likely to come about, and that's going to lead to an EBITDA per ton expansion, as the utilization levels as well move from around 70% to around 80%. And also they've added that the company is in process of doubling their capacity in the next couple of years. So that's the reason why, in fact, the stock is up 6% today. I visited their plants in late December 2016. And from there on, the stock has moved from around 50 rupees to around 130 rupees. MCX, that's the other one we're looking at in today's trading session. Well, it's holding with a gain of close to around 1%. Varinder tells us that volumes, that's something that you need to track. Remember, volumes have not really picked up. So we're keeping an eye out on the volumes, and the last few quarters volumes should be up for you in the screen. So keep an eye out on volumes. If that picks up, then in fact the stock could move higher. Finally, I'm tracking TCI Express. They're meeting a whole host of big investors, so that's going to be quite important. What is TCI Express? Well, it's the demerged express logistics division of TCI. The stock is close to have doubled in this year. But you need to talk about valuations. For last year, they did around 11 rupees. The first quarter, the EPS was roughly around 3 rupees. So if we're assuming that it moves from around 10 rupees that they did last year to around 13 rupees, we should get the valuation chart up for you on the screen. That is trading at around 44 times. And in fact, if you say that it's going to double from 10 rupees to 28 rupees, then it's going to trade at around 28 times. So a lot of the good news in the price. Manglam says, watch out for the second quarter numbers. Then in fact, maybe we can estimate what kind of EPS they can do.
Fair enough. But we also have our eye on tomorrow. Yeah. Before we discuss what is today, Bharat Financial, chances are we are going to finally get the merger ratios for Bharat Financial and IndusInd. What is the street talking about, Abhishek?
So Lata, as you have correctly mentioned, tomorrow is the day when the deal will get done. I've just done a price scenario analysis, taking Bharat Financial's price levels from 1,000 rupees to 1150 rupees. The dilution for IndusInd Bank can be anywhere between 13.2% to 15.2%. Now, in this dilution, I have not factored in the, issue that they'll do of warrants tomorrow to promoters. After that, the dilution may be even lower. But looking at the swap ratio can be anywhere between 0.57 to 0.66 in terms of Bharat Financial to IndusInd Bank. So for every share of IndusInd Bank, 0.57 to 0.66 share is the range that I have analyzed. More likely, our sources say that the deal can be anywhere around 0.63 to 0.64. Remember that Bharat Financial touched 1,000 rupees mark yesterday after 2010. Back to you.
Okay, all right, Abhishek, thanks so much for that. So you've got a busy weekend. You're going to be on top of that one. But someone who's got a rather busy Friday evening, it's going to start late. But in the no cheers till late evening, looks like, because...
We may choose to spend it together, okay, after Reliance results, okay?
Good one.
Why not?
If you are into it, okay?
Nigel, lend him a shoulder. But we are all talking about Reliance Industries. The stock rose 4% yesterday. Yes. Is one of the contributors to the index today. Will the results deliver?
Operationally, I think everyone is bullish on Reliance Industries for the longest of the times. So if you're watching out for numbers, let me just remind you that this is the first time that Jio numbers, income statement will be given, in quarter two. So that is why this quarter is separate from the earlier quarters. Operationally, there are two segments for Reliance Industries. One is refining and one is petchem. Okay, refining, no one has a problem because the Singapore refining margins, they have moved up 30% quarter-on-quarter basis. So GRMs, what we are expecting is $12.5 per barrel, which is actually 6-quarter high. It was 11.9 in the first quarter. So they've been improving gradually. So no complaints over there. In terms of petchem, if you're watching out for petchem EBITDA per ton, remember first quarter was very, very strong for the company, where petchem EBITDA per ton improved from 314 to as high as 350. So in quarter two, we are expecting it could further improve to 370 from 350. So again, both the segments will be firing this time. So no one has a problem. But the thing is that because of Jio reporting numbers, the consolidated profit number could look here and there. We have an estimate that the profit could be nearly 8170 crores. Now, Kotak says that the net loss for Jio could be 2,500 crores. So, and also, CLSA makes a very interesting point, and they say that, that we don't know which is the exact date of start of expensing, portion of cost continue to be capitalized, etc. So there may be more ifs and buts. So that number is very important to watch out for. But honestly, no one is watching out for the net profit number this time. People know, it will be a loss. The important thing is whether the Jio makes, Jio reports a break even at the EBITDA level or not. Okay,
that is one, and then the GRM.
That's the GRM, and of course, GRM $12.5 per barrel. As I said, I'll not be watching out for profit number. I'll be watching out for the EBITDA number. EBITDA, we are expecting on a consolidated basis, it could be 15.4%. So that is the number to watch out for. So GRM 12.5, consolidated EBITDA 15.4%, and Jio numbers could be important. And if you're watching out for standalone numbers which will not have an impact of Jio, then we're expecting a growth of 10 to 12% on a profit basis or a sequential basis.
Okay. Well, thank you for telling us which numbers we have to remember, but you're going to be there to remind us. Of course, I will be there. And hold hands to understand the Reliance numbers. Quick recap of the top buzzing stocks. So the top stocks on our radar, we have MCX results due, TCI Express, Sanghi Industries. That's got a bump up in terms of analyst recommendations as well. Bharat Financial on our radar for the potential swap ratio, which everyone is trying to guess, and Reliance for the numbers. On that note.
All right, then let's slip into a short break. On the other side, remember TCS posted a rather good set of numbers in the second quarter. Up next, we'll get you a chat that Kritika Saxena had with the management. Stay tuned.
Welcome back. Well, among the good news that the market got today was the TCS news as well. The TCS results indicated that the numbers were positive for the second quarter, beating street expectations on several parameters, particularly margins. Kritika Saxena talking caught up with the man behind the margins, V. Ramakrishnan, the CFO, and Ajayendra Mukherjee, in charge of HR at TCS. She began by asking them about attrition, utilization, and campus hiring.
So let's first address the attrition question first. During the Q1 and Q2 time, attrition generally is high, and then Q3 and Q4 attrition tends to come down. Reasons are multiple. One is in terms of we end our appraisal cycle at the end of the year, so that causes certain amount of churn. And at the same time, when you look at people who are going for higher studies and things like that, and so there is a lot of those are the factors that causes the attrition to go up during the Q1 and Q2 time frame, and then slowly it starts coming down. And as far as for us this particular quarter is concerned, we are pretty happy with the kind of retention that we have been able to achieve. And there are multiple factors which is helping us retain our employees. One is the kind of growth that we are having overall within the industry itself. Then the kind of opportunity that people get to work on various technologies, and the whole training effort that we have taken in reskilling our employees so that they're ready for the digital world. So that is what is happening. From an utilization point of view, if you look at, it's been more of how well we are able to, how tightly we are able to manage our operations. And we are hiring as per our requirements. And it's not that we are not hiring in advance, we are also hiring in advance. For example, the whole campus hiring, etc. That's going on. But more and more focus is on reskilling, retraining our people so that we are able to minimize that between one project to the other project, what is the time frame that one spends without getting into the other engagements. So those things we are able to minimize. Without getting into the other engagements, so those things we are able to minimize. So attrition is down, utilization is continuously improving, and that's one of the factors that's helping the margin as well.
Is there a case for a further increase in utilization by next 2 quarters?
See, we have always maintained that utilization is something for a large organization when your base becomes very large, like what we are today. At that point in time, let's not talk about percentages, it's more of the total number of people that you need on various investments that you want to make. So if your margin goes up, as we have said, that we will, in that case, we'll look at what is the kind of investment that we have to take for our future, and that will go up.
If there is a case for a utilization increase, and typically Q3, Q4, you do see a 1 to 2% of an increase. In that case, will that increase your margin trajectory?
Utilization obviously theoretically has a direct relationship to margins.
Exactly.
But utilization, we are at fairly high levels. So this will be marginal improvements in utilization because there's also a construct around how the projects have to be delivered, etc. So it will have an effect, but that is not the only reason why this. Of course, areas like automation, etc. will bring in some this. And the more important is from a margin perspective, as we the growth one, of course, to get to higher growth in some of the sectors which have been sort of muted over the last 1 year or so, both in BFS and retail. Secondly, as we continue to increase on our digital technologies and the offerings, and that business has got quite a significant opportunities across the segments. And the third more important is to unlock the value which we have created in some of the platforms and where we have been seeing traction.
You have seen a 120 basis point margin expansion at the back of operational efficiency. This is largely coming because of absence of visa costs as well as a reduction in SG&A expenses. Will that continue for the near term in Q3, Q4?
I think it's not all of it is in SG&A expenses because it is even in our COR. And you can see that in the improvement in the gross margin as well. So it is essentially a portfolio mix from various drivers. It's not just on an operational, the business part of it, plus also, of course, on the discretionary spending, etc. So we have been always running a tight ship. So we continue to look at costs very closely. And to marry it along with the revenue drivers. So that's what we have been doing.
Realizations have been offset this time. There was an effective 1% decline on a constant currency basis, but they've been offset by the currency benefit that you've gotten this time. Will there be pressure on realization and pricing in the near term?
Yeah, see, the realization, it was actually 1.5% from a decline. But of course, almost all of it was offset by the currency as well, so we did not have that.
Joy, you have said that you're not just increasing local hiring in US, it's also Europe, it's also Australia, all the foreign markets, given the kind of changes that you are seeing in the regulatory situation. But what does that do? And so far you've already done it. So what has that done to cost? Is that the reason why there is a certain amount of tempering with respect to margins, with respect to even the kind of scale of growth that you were able to achieve earlier?
So from a cost point of view, I think what I would like to highlight is when we hire locals at the same time when we are sending our expats, the wage disparity is not too much.
There was 3,400 of an addition. Last quarter there was a reduction by 1,400. But again, Q1 is typically a seasonally weakish quarter for attrition.
From a net position.
I get that. But is that number going to be sustainable? The 3,400 employee addition, is that something that you're going to look at targeting on a quarterly basis?
See, this year what we said is the gross point of view, our addition will be lower than what we did last year. So total net addition also as a result will be lower than what we did last year. And that is primarily because of productivity improvement that we want to do, overall business plan that we see, the growth that we are looking at, and the productivity improvement that I just mentioned. So there are a lot of other automation tools that we are bringing in order to improve our productivity, and that's going to continue. So they will be hiring, they will be net positive. But at this stage, and given the overall situation that we are in, the campus hiring is done. So that is for the whole year, that is already done. They are already planned to join at different points in time. The rest of the hiring is happening based on our requirement.
Well, a whole host of stocks are moving around as we speak. The Nifty's virtually moved to the high point of the day. SAIL as well has spiked up as we speak as well, and Gujarat Borosil as well at the high point of the day. Just keep an eye out. Some of these steel and coking coal prices as well are spiking up, and that's the reason why in fact we are seeing SAIL move up. We're just checking on that. Steel prices apparently have already moved up by close to around 5% today, but coking coal as well is spiking up. So SAIL is moving. It's moving very, very well to the high point of the day as we speak. But we caught up with the four market wallas, Deepan Mehta, Ambrish Palega, Mr. S.P. Tulsian as well as Prakash Diwan, and asked them for their picks for Samvat 2074. Here are some of the stock recommendations that can light up your portfolio.
This company recently, monetized by selling their consumer durable business to Havells for 1550 crore. And that has been the conscious move. And if those who will read the chairman's speech, which the company has uploaded, in fact, they have given a guideline that how the proceeds will be utilized. And what I liked about the company, that pending the adjustments and all those things, receipt of money, they have been generous in paying a special dividend of 2,000%. That is 20 rupees per share. So extremely positive view over a longer term, but keep giving a target of 440 by next Diwali.
Gulshan Polyols, again, a fairly new name. Not many people would have come across this. It's a fairly old company, to be honest. It's been operating out of Muzaffarabad in UP for the last many years. 25 years this company has done the same business of making sorbitol and carbonates.
The company is sitting on orders worth about 8,200 crores or so. But the opportunity size is huge. Namami Gange itself is about 25,000 crores. A couple of states, your Maharashtra, Karnataka, Tamil Nadu, and Delhi, the opportunity size in terms of the tenders which would be coming, that's about 18,000 crores. I'm not even talking of the rest of India. So 43,000 crores just between these. So there's no way, Viatech Vaba will not have work. Clearly the visibility is there at least for the foreseeable 8 to 10 years. So again, looking at an EPS of over 38 rupees for FY18, 46 for FY19. I don't think the downside is very much from here. It may just correct in case the market corrects. And I'm looking at a price of about 850.
I'm very confident that this company, again, is a secular growth story, can easily grow at 15-20% for the next several years or so. So you get the benefit of compounding over here. And although it's a bit expensive at this point of time, but about 37 times or so, I think over a long period of time, I think these high premium valuations will get neutralized. And you have, of course, the benefit of the Z brand, the Kids Z brand, which is a very powerful brand which the company has created over several years. And on the well-managed education companies, there is a lot of technology also in terms of delivering education, child development at the preschool stage as well as the K-12 stage. So looking forward to great growth from this company.
Well, keep your eye on the screen. A whole host of mid-cap stocks as well are moving around. Gujarat Borosil, something's going on there. For this week itself, that stock has seen a big run. We are at CNBC TV18. We reached out to the management. We had them on our channel earlier today. Today, remember, the stock is up close to around 18%. Week to date, it's up close to around 42% approximately. So let's pull up the last 7-day chart. You'll see the stock has moved from sub 100 levels very quickly. In fact, it's up more than 55% in a single week. The brief highlights of that conversation we had with the management, they said that last year they did around 188 crores approximately. So let's get that played up for you. And the last year, we didn't see any growth whatsoever. But for FY18, they're targeting around 200 crores. And after that, they're looking at around 400 crores. We asked them how they're going to be funding it. And they said that, in fact, they didn't rule out any option. They said all kinds of options are on the table. So just keep an eye on that stock. It's really had a big dream run. They're looking to double their revenues. So maybe that's part of the reason why, in fact, that stock has spiked up. But,
okay, my eyes are fixed on the markets. At this point in time, still within kissing distance of the all-time highs. But they have moved away the Nifty has moved away about 6-8 points from the all-time highs of the day itself. We did see it go to 1,165. Our tech gurus are with us to tell us how we can trade the remaining part of the trading day, Ashwini Gujral and Prakash Kaba. Good afternoon to both of you. Ashwini, the Nifty trade now, you said on dips that we would buy. That was the last conversation.
See, obviously at previous highs, you will find volatility and some amount of profit booking. But the idea remains the same, that if you get dips towards 10,100, continue to buy into the Nifty. At some point, you will get past it. So for the moment, it's just consolidation and stopping just ahead of the previous high. So that way, given the strength of the bank Nifty, I think at some point you will get past the previous high on the Nifty at least. As far as individual stocks are concerned, Uflex is a buy with a stop of 467, target of 490. Canara Bank is a buy with a stop of 302, target of 321. And Escorts is a buy with a stop of 710, target of 745.
Okay, thank you for that. Ashwini, we'll come back in a minute. Prakash, what are your midday trades?
I have two trades, both on the long side, because Hindustan Zinc certainly is looking good to me. Looks like it can climb to levels closer to 327 zones, stop below 315. I like PI Industries as well. Seen a good base formation, up move has started. Looks like it can climb to levels closer to 780 zones, stop below 750.
Okay. Well, earlier today we asked you, Ashwini, about Bharti-Airtel, and you said that it is showing signs of a breakout. Is there a trade now intraday? And more importantly, the positional numbers as well, the contours that you would look at. Likewise, an idea.
See, Bharti has made a positive bar. It went as low as 400 but recovered. So chances are that 430, 435 may get crossed. So that way you can buy into it. Now, idea is in a very clear bear market. Below is 200. So maybe you can have a rally to 87 to about 90 zone. Don't get overexcited on telecom. Today there is some news flow, etc. But it's...
Okay, one theme that the market has been playing is the steel stocks. The other theme has been the telecom stocks. And the third theme has been the battle against bad loans. Remember, Nigel was spotting stocks like Uttam Galva and Monetis Path. The source for this excitement is what Ritu Singh, our colleague, broke just a little while ago. 6 players have submitted expression of interest for the debt-laden electro-steel steels. That is, of course, in response to the memorandum floated by the insolvency professional, the interim guy who is in charge of assets that have been taken to the bankruptcy court. And there are some marquee names who have shown interest. So, Ritu Singh, take it away.
That's right, about 6 players. We have some marquee names, as you mentioned, that have expressed an interest in acquiring stake and making an investment in electro-steel steels. This, of course, is in response to information memorandum that was floated by the IRP, which the submission for the last deadline for which ended on Monday, just this week. So these 6 players include the likes of Tata Steel, the Dalmia Group, Even the Edelweiss group has put in a bid. We have players like Shrey Infra, interestingly, who's also one of the large unsecured lenders to the company, that have also submitted an expression of interest. It remains to be seen whether, in what capacity they will be interested in. No formal bids have been made per se, because remember, this is just an EOI. Next week will be a lenders meeting, after which the data room will be thrown open for all of these 6 players to go ahead and make their bids. The promoters, by the way, are also one of the people that have expressed an interest in acquiring or taking back control of the company, which has also been a recurring theme we've seen in a lot of these steel companies, that the promoters are also part of the bidders that are vying for the company. So, of course, what the IRP and the COC decides, we find out next week. We're talking about an 11,000 odd crores of debt. Haircut, as usual, will be the key.
Absolutely.
All right, I just want to add, there was a note that came some days ago from IDFC. What they said was that for Tata Steel, Electro Steel will be a good fit. Why? Because currently Tata Steel, most of its capacity is flats. Electro Steel is longs. So that's just a note that I thought I'll highlight.
Yeah, but much will depend on who gives who demands the lowest haircut, and the banks should perhaps go for that. Which is where the promoters are always one of the parties standing. We take a break. We're coming back, this time with commodities. We've spoken so much about steel. It's time we got you commodity trading ideas. Himanshu Gupta of Carvi joins in a minute.
Video gaming.
Okay, from the mid-caps, we have UFO movies. Just take a look at that stock. It spiked up. My producer just tells me that, in fact, Deepan Mehta as well yesterday, that was one of his recommendations, and that one is doing well. In fact, it's moved to the high point of the day. Oberoi Realty as well. Keep an eye out on that stock. Volumes picking up there. When we started off the show, it was up 2%. Now it's up close to around 4.5% as we speak. But clearly, the ferrous space and the non-ferrous space, a lot of action over there. Manisha Gupta joins in to tell us what exactly is going on.
Okay, Supreme Court refuses to relax the firecracker ban in the Delhi NCR region. Well, I'm on their side.
And I think there was also something saying that even Haryana, Punjab would allow that between 6:30 to 9:30 p.m. only. So I think there's a fixing of time coming in for some other states as well. Okay. But what is also fire-tracking up is the metal space, and you are looking at steel and iron ore prices jumping up, as I'm assuming you would have mentioned. Yes. But I just want to give a sense on why the prices have run up. One, of course, has been the reason that today we saw the Chinese trade data come in, and while the exports have jumped up for a 7th straight month, the imports for steel have been at record high for the month of September. So even as you have seen many states and provinces in China continue to cut steel output ahead of winters, it is a very strong demand that China is expected to see, and that has led to imports at record highs. That clearly seems to be firing the prices on the higher side. Also, the latest province to join in, of course, has been Tangshan, which is expected to cut its output by 50% starting next fortnight, and that has been supportive as well. So with the steel prices running up, you have seen all the other ingredients run up as well. So right from coke to coking coal to iron ore to zinc, all these commodity prices have been on the higher side as well. Well, just to give you a sense on all of these commodities, steel actually is up by 48% in 2017 now, has been the best performer amongst metals, because all the other metals are up between 25 to 35%, but steel clearly stands tall with 48% of gains in this year until time. Himanshu Gupta of Carvi Commodities now joins us to talk about that. Himanshu, hi, what is your sense when it comes to the metals as a space? The China data reaction, of course, is what we see across board here.
Good afternoon, Manisha. Well, clearly, looking at the strong import data from China and the strong rally in the steel prices in the China, I would like to go long in zinc for today's session. We have already seen some kind of recovery, a short covering in zinc in yesterday's session also. And in today's session, I expect this rally to move on further. So from a trading perspective, one can go long zinc around 214 for the targets of 217, and the stop loss below 212.70 would be recommended.
Himanshu, just staying on with the metals, we are looking at aluminum and zinc, the net long speculative positions in this one at a multi-month highs. We also have seen the copper and the aluminum prices gain up by 3.5% in this week alone. With the kind of run-up, are you expecting further gains building up at these levels?
Yes, Manisha, but we need to be very selective since we have already seen that these net speculative long positions tend to be decisive at times. So one needs to be very specific. And as far as our recommendation from the immediate short to medium term is concerned, we would be looking to go long in zinc and nickel particularly.
Yep.
All right. Thanks so much for that, Himanshu, as well as Manisha for joining in and running us through those details. Keep an eye out on the screen. The Nifty is moving towards that record high, so just keep an eye out there. The Nifty Bank, by the way, has hit a triple century. It's up close to around 320 points, so good going there. We'll wrap up on the show. You stay with us. Business Lunch comes up next.
Hey, Ark, these mutual funds for me?
Yes.
Done. Thanks. You know, Ark, I plan to retire by
50.
And I've always wanted
Purple SUV. Farmhouse by the beach.
Meet Ark, the engine that powers angel broking. Ark uses machine learning and cognitive technology to analyze over 1 billion data points to recommend mutual funds based on all your life goals. Download the Angel Broking app powered by Ark.
मिल्टन के थर्मोस्टील फ्लास्क्स ये 24 घंटे तक गर्म को गर्म और ठंडे को ठंडा रखता है। मिल्टन, कुछ नया सोचते हैं।
Z3 Relaxed Luxury by Zodiac.
By investing in technology, the Chennai-based mutual fund transfer agent Computer Age Management Services has carved a significant market share of 63%. Catch the promoters, management and industry experts as they decode the success mantras of CAMS. Decoding Business Growth Season 3 at these times. Presented by ICICI Securities.
आतंकवाद भारत के अंदर है तो अमेरिका उसका इलाज भी कर सकता है।
आपके हक की लड़ाई लड़ने के लिए आर पार ने बड़े शहरों में शाम 7 बजे आज तक को पछाड़ा। देखते रहिए